Welcome to Inside India. I'm Amitabh Singh, and these are your headlines this Monday morning. Asian stock markets are rallying after the US Supreme Court struck down a large part of President Trump's tariffs. Trump turning to other avenues, though, hiking temporary tariffs to 15% on all countries. As countries also scramble for clarity on what it means for them, sources telling CNBC that India will be rescheduling its planned trade visit this week to Washington. And China calling on the US to lift all unilateral tariffs on its trading partners as President Trump prepares to visit Beijing at the end of this month. All right, let's get a check on the Asian markets reacting to all the trade news emanating from the US from the last 3 days, really. Japan and mainland China are shut today. Australia is really the only outlier to the broader positivity. Perhaps, as we understand, investors now see regional exports benefiting or getting priced in differently relative to Australia's, and that's the big one. South Korea's Kospi up for a third straight session, perhaps expected up 1.13% right now, up 1.7% a little earlier, hitting a fresh record high in the trading session. Also, the heavyweights there, SK Hynix and Samsung, did rise over 3 and 2% respectively. Hong Kong, we're watching that very closely. The Hang Seng is up 2.63%, and as we understand, Hang Seng Tech is up nearly 4%. We're also seeing Taiwan equities still rallying. This follows Wall Street's indices climbing on Friday after SCOTUS's verdict. Now, the Indian markets, they come online in about 45 minutes. GIFT Nifty futures are indicating at this point in time that it is likely to be a higher open. That is, at this point in time, clear. What we understand is how much does the market really remain spooked by the uncertainty emerging in the US, or does it price in the weekend's developments positively? Remember, India delaying its trade talks. That trip was this week. That has been delayed indefinitely. It will be held at a mutually convenient time. Later is what we understand based on a source telling CNBC this. Also, you have to watch out for India's US-dependent IT sector. The HDFC Bank stock you should watch out for, because the bank has said it was investigating a suspected fraud of 65 million by some employees involving accounts of local government entities. The rupee too in focus after reports said the RBI likely intervened to keep it above 91 to the US dollar, and that was IDFC Bank, I beg your pardon. So we're watching all of this, the rupee strengthening and going from 90.9 to 90.7640. We'll have to wait and see how the markets open and really factor in everything that's happened. Now, US President Donald Trump says he will raise new global blanket tariffs to 15% from 10%. It comes less than 24 hours after he announced a 10% worldwide levy in retaliation to the US Supreme Court striking down his sweeping tariff program invoked under the International Emergency Economic Powers Act. 15% is the maximum legal level allowed under Section 122 under the 1974 Trade Act, which is only intended for short-term emergencies. It has never been invoked before. It allows the duties to run for 150 days unless Congress approves an extension. Trump says the window gives his administration time to pursue other tariff measures. Here's more of what Trump had to say.
But other alternatives will now be used to replace the ones that the court incorrectly rejected. We have alternatives, great alternatives. Could be more money. We'll take in more money, and we'll be a lot stronger for it.
And over the weekend, a source told CNBC that the 3-day talks scheduled in Washington, D.C. between India and the U.S. have been delayed and will be rescheduled at a mutually convenient time later. But the asymmetrical nature of information coming in after the verdict at midnight Singapore time on Friday night was a lot to digest, even for Nifty futures that did jump about 400 points at the time. Now, Trump saying the deal with India is on, nothing changes in the pact. A report by Hindustan Times in India saying on Saturday that everything remains on course before Sunday's development, that India won't be sending a delegation to the US this week as it needs to recalibrate its position and evaluate the verdict. Remember, this US-India joint statement explicitly said that in the event of changes, modifications in commitments can be made. If what Trump has said is written in stone, which it isn't yet on the White House fact sheet, then India should be paying 15% henceforth instead of the 25% it was expected to pay till the interim deal was signed, which was, remember, expected in March and would be coming into play, implemented in April, according to the Commerce Minister Piyush Goyal of India. And that timeline now is completely under question. Perhaps most importantly, has the balance shifted in India's favor in terms of negotiations at a critical moment in these talks, or will it maintain the spirit of the interim trade deal, and will it feel emboldened to continue buying Russian oil, which data suggested it was reducing but not entirely stopping, as Trump claimed, and India did not confirm that claim? We have with us Sarang Shidore, is the Director, Global South Program at Quincy Institute. He's joining us once again after joining us about 2 months ago. We really appreciate you coming on, and what a time to come on, sir. I want to start by asking you, Trump saying that the deal is on, and there won't be any changes shortly after the verdict, but then India delaying their talks indefinitely. Does that suggest to you that India is now on the offensive, wanting a new deal, a better deal perhaps?
Well, we have to see, but if you look at sort of the overall structural situation, those countries that were early in striking deals with the United States after the Liberation Day tariffs of last year have been sort of left holding the bag, whereas those other countries that resisted, like Brazil and others, in agreeing to any demands from the United States, may be feeling a little more vindicated because of the Supreme Court's stricture against the Liberation Day logic of imposing high and rather arbitrary tariffs on many partners. So in the case of India specifically, it had made commitments, for example, of buying much more from the United States over 5 years. $500 billion more of trade was supposed to flow from the US to India. There are conflicting reports, as you have noted, on the nature of Russian oil purchases, but there's no doubt that US pressure is having some impact, at least, in terms of reducing India's imports of oil from Russia. So there are these sort of commitments or semi-commitments or movements in the case of India based on these negotiations that are now looking perhaps a little too much, given that the entire trade regime is now under question and maybe at least limited and constrained. Even if Donald Trump finds a way to impose tariffs through other means, his ability to change tariffs on a whim, and indeed change tariffs based on extraneous factors like the purchase of Russian oil or other factors that don't have much to do with trade or economics, will be constrained a lot. So India really has to do its math again and see where it can again come out on top, relatively speaking, take advantage of this opening. But it does start from a little bit of a disadvantage, having already agreed to certain things earlier.
A report by Global Trade Alert just this weekend after the verdict, basically saying that if you made a deal, you now pay more. Those taxed higher, like Brazil and China, get a reprieve, as does India. The EU has been impacted, clearly, and they have indicated that they won't stand for this. You alluded to this, but what's your deeper view on how this pans out?
I think right now there's just a lot of confusion because we don't know, first of all, that 10% got raised to 15% from Donald Trump. Initially he had said there'd be 10%, then it's 15, and we are still told that the 15 hasn't actually been implemented. So we have to see how all of this pans out. And there's no question that in terms of the trading partners of the United States, they have been given a kind of an opportunity, depending on where they were before this verdict, of pushing back at least a little bit. Like I said, those that didn't agree to any deals, I think, have more leverage. Those that have made commitments of various kinds have a bit of a less of a leverage.
Diplomatically, how does India react to this? Does it maintain its usual modest response, that kind of stance, silence from the Prime Minister, but within closed doors, it exercises this newfound leverage? Do you see that happening?
Yeah, I think essentially India's approach to all of these sorts of bazookas from Washington, uncertainties from Washington, has been very careful and very cautious. In terms of rhetoric, India has taken sort of a circumspect stance and has tried to negotiate. So I don't expect that to change. The tone and the rhetoric will remain guarded. After all, there are convergences between the US and India that continue. For example, in tech, we are seeing that, and of course, on the question of China and balancing of China, there is still a major interest for India and the United States to work together. So, and then India has also been invited and has joined Pax Silica, which is the sort of a new Trump administration initiative on supply chains. Is linked to AI and other tech spaces. So there are a lot of things happening on the US-India front that are actually cooperative. And then there are things happening that have been contentious. And India is trying to ensure that it doesn't lose out on the positives.
Is it fair to assume then that the trade deal between India and the US will not be signed in March, as Commerce Minister Piyush Goyal had suggested earlier?
Yeah, I mean, I don't have inside information, but I would imagine there would be a delay because there's going to be, first of all, there's uncertainty in Washington itself. That's got to get resolved. And then you sort of get to the bilateral conversations and finalizations of these details. Because a lot of these deals, Amitoj, are frameworks or are headline deals that have certain things have been agreed upon. Very many complex aspects of these deals have still to be worked out.
What aspects of the trade relationship, if they are to be worked out, should Indian negotiators now rethink and prioritize?
Well, I think essentially the Russian oil question remains very interesting to me because we are not quite sure what is happening there. In many ways, India's relationship with Russia is beyond just oil. It is a strategic partnership. And India would not like to pull back on it beyond a point. So I expect that to be an issue in the shorter term. Now, in the longer term, the US and Russia are on a convergence path, I do believe. So in the longer run, this issue may actually go away, but in the short run, it presents challenges. And then there are, of course, other classic areas of India-US trade differences, such as agriculture and dairy, sensitive sectors for India. The US has been trying to open them up for a long time. And so those kinds of debates or differences, I think, will continue.
I'm glad you mentioned the Russia point, the Russian oil point. Will India now feel at least more emboldened to continue buying that Russian oil? Purchases of it were reduced, as we understand from data, but India never backed Trump's claim that it would stop completely.
Right. India has not said that it's made any kind of commitment. And I do expect that India will maintain a healthy relationship with Russia, including on energy going forward. It may be at a lower level, but I expect that to continue.
Just want to bring up the statement, India-US joint statement. It said in the event of any changes to the agreed upon tariffs of either country, the US and India agree that the other country may modify its commitments. In that, with that in mind, would you suggest that India should maintain the spirit of the joint statement at least?
Yeah, I mean, it gives it sort of that sentence that you quoted provides each party a sort of a way out if there's a shift on the other side, and there's been a shift on the other side in the case of the U.S. with this ruling. The question really is, what does this shift entail? Because the Supreme Court has said what is not possible. What we haven't seen clearly is what is possible now. What will be the new pathway for India from the US and at what levels? So from that perspective, India certainly gets a space to come back and say, well, let's make some changes. But before that, the US has to come out very clearly and say what its new parameters are.
Briefly, sir, India's Prime Minister and Brazil's President Lula deepening trade ties over the weekend has jumped now from 25% in 2024 to to 2025. That's how much it's jumped, and they're eyeing 30 billion by 2030. They also signed a new MOU to expand cooperation in mining and minerals. Fair to see India's foreign policy shifting to play hardball with the US while deepening ties on everything, everywhere, all at once?
Oh, certainly. I think multi-alignment has always been India's grand strategy. But I think what has happened in the last year between the US and India, the sort of shocks that emerged on the trade front and Russia fronts, have added to that urgency of multi-aligning. And here, India has actually, in the last 3 or 4 years, assertively spoken out for the Global South, has identified itself as a member of the Global South. The Foreign Minister, Jaishankar, has said that the Global South is, quote, in our DNA, unquote. So if you look around the Global South, Brazil is one of the biggest players in that space among the developing world. It's India's largest trading partner in Latin America. And there's a lot of complementarity and no disputes whatsoever, really, in terms of anything serious. Right. So all the reason why India and Brazil should deepen their relationship. And I think Lula's visit, President Lula's visit, has added momentum to that dynamic. And I expect that relationship to flourish and grow in the coming years.
Sarang Shadore from the Quincy Institute, thanks so much for joining us. Really appreciate that. All right, after this break, we'll continue to track the reaction in the Asian markets to all the tariff news flow. Stay with us. We're back in 2. Welcome back. We've been tracking market reactions across Asia this morning. Our reporters are standing by right here with us. Japan's out of play today, but let's just start with South Korea because the country is, remember, heavily exposed to tariffs on semiconductors and other high-tech exports. Our East Asia reporter Lisa Kim joins us with the latest. Lisa?
Hey, Amitaj. So South Korean stocks hit a fresh high this morning, partially thanks to the industry minister's comment that chips are not subject to Trump's new tariffs. And also, he said that he will continue to engage in discussions with the U.S. in order to, quote, maintain or balance interest between the two countries without elaborating further. When it comes to those investment pledges, hundreds of billions of dollars worth of investment pledges that Japan and South Korea separately made paid to Washington last year in exchange for lowering those reciprocal tariffs, they look to stay in place. After a meeting among officials from the ruling party, government, and also presidential office, a ruling party spokesperson told local reporters that the legislative branch will continue to aim to pass the U.S. investment bill by early March, citing it as a matter of national interest. When it comes to Japan, their government officials are telling local reporters that the projects underway in the U.S. as part of those investment pledges will continue, and that those projects in the U.S. are part of Japan's economic interest. Also, David Bowling of the Asia Group told me that President Trump has leverage over both countries with regard to Japan. He has a leverage in terms of autos. Autos industry is a huge part of Japan's economy. In fact, that industry employs around 8% of Japan's working population. And when it comes to South Korea, President Trump has leverage in terms of autos and semiconductors. Those are two of the top two most exported items to the U.S. And when it comes to those refunds, around 10 Japanese companies have already filed for lawsuits in the U.S. in December in order to claim those refunds if the Supreme Court were to find the reciprocal tariffs unconstitutional. And for South Korea, industry minister said that he thinks the refund process will be quite uncertain. Now, let's get to our China reporter, Elaine Yu now. She's got some latest commentary from Beijing. Elaine, tell us more.
Yeah, Beijing has weighed in now. The Ministry of Commerce in China said that it is making a comprehensive assessment of the ruling's content and its implications. And it said that the unilateral measures taken by the U.S., including reciprocal tariffs and fentanyl tariffs, violate both international rules and domestic U.S. law. And the ministry said that China-U.S. cooperation benefits both sides while confrontation harms others. And it urged the U.S. to cancel its tariffs. And the ministry also noted that the U.S. is still preparing for alternative measures, including trade investigations, and that they are monitoring the situation closely and will firmly safeguard its interests. Now, a social media account linked to the official Xinhua news agency is a bit more colorful, saying the ruling is Trump's most significant setback since his return to power, overturning his signature economic policy. And the account also said that J.D. Vance's comment calling the SCOTUS ruling lawless is like watching, quote, absurd dark political humor. Now, the timing of this ruling is really interesting because the White House official has recently confirmed or set the date for Trump's visit to China, expected now from March 31st to April the 2nd. And in terms of how the ruling would affect the negotiations, Scott Kennedy from CSIS told me that the SCOTUS ruling doesn't upend China-U.S. ties because China already has the upper hand, he said. And that means that it's even more likely that the summit will have limited outcomes, especially on thornier issues. Now, Julian Gewirtz, a former White House official, told me also that China has long ago determined that it can outplay and outlast Trump's tariffs, and that Beijing is glad to use Trump's desire for a deal to extract concessions. Now, Ming-Hsin Pei, an expert on Chinese politics, told me, though, that it's not totally clear that the visit will definitely happen because if, say, Trump attacks Iran, then it will likely be postponed. But he said that she tends to make calculations politically and not economically. And he said that President Xi might be open to giving President Trump a better commercial deal in turn for something else, such as a Trump statement on Taiwan that could be seen as a win for the Chinese president. Now let's turn to JP Yong, who's been keeping track of the reactions out of Southeast Asia. JP, what are you seeing?
Yeah, Elaine, it's pretty positive, actually, when you look at how the indices across Southeast Asia are reacting to this, because most of them are actually going to see their tariffs lower from average of mostly 19% to about 15%. The one country that might actually have get a worse deal from this, actually, Singapore, because as we know, Singapore was one of the handful of nations that had the lowest baseline tariff of 10%. If this goes up to 15%, that means they'll face higher levies, actually. And Deputy Prime Minister of Singapore, Gan Kim Yong, did say that they're seeking clarity now from the United States as to whether or not this is the case. But as you saw a while ago, So you see the Straits Times Index holding on to some of those gains. The other market also look out for today, Indonesia. And this is also interesting and quite timely because 24 hours or less than 24 hours before the Supreme Court decision, Indonesia actually signed off and finalized that trade deal that set the tariffs at 19% with the United States when Prabowo Subianto of Indonesia was in the U.S. As part of the inaugural Board of Peace meeting, where he signed off on the agreement with President Trump. And less than 24 hours later, the Supreme Court says that the IEEPA tariffs are not valid anymore, and thus also has opened Indonesia out to further negotiations of this particular index. You'll see here the Jakarta Composite doing quite well in today's session. But in terms of markets that might also be not just sensitive to these developments, but also because of the impact of possible competition with India, you'll have to look at Vietnam, because Vietnam also, while they might see their tariffs go from 20 to 15%, the sectoral tariffs levied on steel exports from Vietnam to the United States, on furniture exports from Vietnam to the U.S., might still face those sectoral tariffs. And we have to also remember that Vietnam and India compete with regards to exports to the United States, not just on textiles, but also on shrimp exports. These might not be seen as being a top 10 exports from Vietnam to the United States, but still does mean that there is that these are sectors that they'll have to be wary of, but also sectors that might see their competition with India also enter a new dynamic, because now they both might be facing similar tariffs of 15%, thus maybe also just complicating some of the competitive dynamics for these two countries in these two particular sectors. In fact, speaking more on these tariffs, CNBC's Monica Petrelli is also looking at all the legal angles with regards to whether or not companies and countries can actually recoup and perhaps petition for refunds on some of these tariffs. Monica, there's a lot to deal with right now. What have you got for us with regards to how to perhaps untangle the new tangles and new complications we've seen over the last 72 hours?
Yeah, JP, so this ruling, really as predictable as it is remarkable in the legal world. So predictable in that the outcome is what many had believed would happen, but still remarkable in the sense that it has unraveled Trump's signature economic policy for his second term. Also, because it was a 6-3 decision, including 2 Trump appointees, now basically shattering this air of invincibility, this air of allegiance that he's largely been afforded by many federal appointees as well as Republicans in Congress. Now, Trump wasting no time, employing new tariffs, jumping from 10% to 15%, using Section 122 of the Trade Act of 1974. However, this no slam dunk either. There are limitations here, limitations that will surely be subject to new litigation in the coming days and weeks. However, the Trump administration has also signaled it will be using other levers to then administer new tariffs going forward. So definitely no backing down. Now, as to those refunds, well, a lot of companies asking when they're going to see them. We know that this is not going to be quick nor easy. We do see, though, a growing chorus of Democratic lawmakers from California Governor Gavin Newsom to many senators now saying the government should refund these tariffs. The Trump administration has said it will fight. Back to you, Amitoj.
Thanks so much for that, Monica. We'll obviously come back to you as and when there's much more on legal interpretation. Now, we're going to be taking things back to the Indian markets in just a bit. Stay with us. We're not too far from the market open. A quick check on oil in Asia trade. Right now, both light crude and Brent are down about 1%. Remember, U.S. and Iranian officials will meet in Geneva for a third round of nuclear talks this Thursday, according to Oman's foreign ministry, which has been mediating these negotiations. Iran has signaled a willingness to make nuclear concessions, including reducing its highly enriched uranium stockpile in exchange for sanctions relief and recognition of its right to enrich uranium. Trump has called for a huge buildup of forces in the Middle East, which is going on, including preparation for a potential multi-week air attack on Iran. Tehran has instead threatened to strike U.S. bases if it is attacked. So we are watching oil quite closely. We're also counting down to the market open in India. At this point in time, this is how we're shaping up. It's going to be slightly positive from 25,571 on the Friday close to 25,757. Remember, Nifty futures, they did jump about 400 points after the verdict of the Supreme Court. And the rupee is in focus because there's been likely intervention, according to reports from the central bank, bringing the rupee back within this 90.7 range from the 90.98 range that it had hit. It was weakening against the dollar, but it strengthened a little bit at this point in time. Still, it's very volatile, and we'll keep watching this very closely. Manishi Ray Chaudhary is the CEO of Emmer Capital Partners and joins us for more on this. What a day to join us to be able to predict what Nifty will do. Thanks so much for coming on. I want to start by understanding from you, futures in India up nearly 400 points before paring that back to about 300 points. That's the Nifty 50. How do you see Indian markets reacting this Monday morning?
In one word, and thank you very much for having me here, I think in one word one could summarize that with chaos and uncertainty. You know, that's what we are seeing in Asian markets, that's what we are seeing in commodities, in precious metals. And I think in the near term, India would not be too different. Okay, the 18% tariff now possibly stands reduced to 15%, but one doesn't know for how long. That's point number one. The US administration is clearly looking for avenues to increase it further. They're going for investigations into specific trade partners. One wouldn't know what the outcome of that would be. And finally, I think it seems that, you know, these tariff-related uncertainties, which were sort of, you know, going out of the window towards late last year and early this year, are now back on the table for investors to consider with a full force. You know, so I think, you know, I mean, the knee-jerk reaction for India has been positive simply because the headline tariff has gone down a little, but it also means that everyone is now on the same level playing field. Everyone is at 15%. So that relative advantage that India seemed to have relative to, say, Vietnam or some of the other ASEAN countries, that doesn't exist anymore. And I think it'll take some time for the market to digest all this.
Okay. I guess the question then is, how do you see them digesting it? Like, how do you see them trading, or, you know, how do you see investors allocating during this, what you called chaotic time?
Absolutely. So, you know, first of all, I think one broad difference that India has, you know, has encountered compared to much of Asia ex-Japan is actually in terms of the core fundamentals. And I'm referring to earnings estimates going forward. If you look at 2026 earnings estimates or even beyond in 2027, much of the Asian markets have actually had significant upgrades. I'm leaving out Korea or Taiwan, which have been the biggest beneficiary of AI CapEx theme. Korean 2026 EPS upgrades have been almost 70% over last 6 months. And Korean tech, the consensus EPS has moved up 200%. In contrast, there are just 3 countries in Asia ex-Japan, which have had EPS downgrades, and India is one of them. India is the largest market which has had an earnings estimate downgrade. We have also had that in Indonesia and Philippines. So I think that fundamental change would have to come about before foreign investors get more enthusiastic about the market. Till then, they would be focusing on sectors which are combining strong growth going forward, with reasonable valuations. I would say basic materials is one of them. Some pockets of consumer discretionary are also one of them. I would and in fact, I think most foreign investors would also avoid the IT services. They're the classic AI loser until and unless we see otherwise. And I would think industrials, particularly those related to defense and other infrastructure construction, would also see a nice run. I mean, we are seeing that in key stocks, prominent stocks like Larsen and Toubro, for example.
I'm glad you mentioned IT services and you mentioned earnings. Fundamentally, that's what investors have been watching. But I want to ask you to just dive a little deeper into the IT services stocks and how they might react to this new trade uncertainty. I ask because they've already had the Anthropic shock, which has arguably structurally repriced IT services companies. Nifty IT index saw a 10% decline in 2 sessions around Feb 3rd. But at the same time, you had the India AI Summit, where there were a lot of voices within the IT sector that tried to calm these tensions in the IT sector. What's your view then?
Right. I think some of the, the inputs coming in from the Indian IT companies is correct. This enterprise software that is so deeply embedded among the large service sector companies or even the large manufacturers and large retailers in the Western world, that they can't really move away from those enterprise softwares overnight. So it's not that they can, suddenly move away from software that's being, the services that are being provided by Infosys or TCS and move into Anthropic straight away. But we are also seeing this, and I have been speaking to many of my, my former colleagues and my friends who are in senior positions in these companies. Already, these clients are beginning to ask about what would be the pricing if AI agents are brought in. They're not just asking about, the headcounts or the FTEs anymore. They're actually coaxing the Indian IT service providers to incorporate that AI agents in their service, this kind of service that they provide. So this means that while this service, the top line might remain the same, the quantum of service that's being provided, the pricing would obviously take a hit, and therefore the margins and valuations of these companies. We are in the initial phase of that. Over the next few quarters, we will actually see the impact of this, in the, the kind of bottom lines and margins that these companies announce. So, I think, we're still, and for the foreseeable time horizon, will be in a very uncertain phase as far as Indian IT service is concerned.
I mean, does anything change for foreign investors after this weekend, after the SCOTUS verdict with their India portfolio, how they assess it? You've kind of indicated they're going to stay away from IT services. Does anything change?
Right. You see, India, fortunately, is largely a domestic economy. So it's, personal private consumption is about 62% of the economy. Investments are somewhere close to about 25 to 30%. Net exports are obviously negative. So, to a very significant degree, investors who were focusing on the Indian domestic economy would continue to do so. But at the same time, investors are also very mindful of, what I mentioned earlier, that all this so-called GDP growth of 8 to 8.2% should translate into corporate revenue growth and corporate earnings growth. And that, unfortunately, we're not seeing anything. I did an exercise recently just looking at which sectors have had earnings estimate upgrades over the last 1 month, 3 months, and 6 months. There are almost 50 sectors in Asia ex-Japan out of about 160 to 170. In India, there's only one, and that's basic materials. I think the energy, the oil marketing companies have also had some minor earnings upgrades. But pretty much everything else has actually declined and continue to decline. So I think that's first. The basic fundamentals are what the foreign investors would continue to look at.
That's the key point. I'm glad you mentioned this because RBI's MPC minutes were out on Friday. And the big takeaway is that the broad consensus within the RBI is that the growth outlook is improving while inflation remains contained, making the current policy stance appropriate, but volatility is expected to stay elevated and therefore transmission is not happening. So I guess the question is, and you pointed to this, how does the RBI's rate cuts transmit? And how does it positively impact liquidity under this climate of uncertainty and result in that earnings pickup that you're trying to look out for?
Now, that's actually, it's the million or billion dollar question at this point of time. The RBI has cut rates, the benchmark rates by 125 basis points. It has not led to anything on the 10-year bond yield. The 10-year bond yield declined a bit, and then since last, I think around July or so, it is back to square one. It's about 6.6%. So, obviously, for the RBI continuing the OMOs, or even for the government, I think the government liquidity, the total cash with the government has increased quite a bit. So I'm at a loss to figure out why the government is sitting on so much cash. It used to be about 50 billion Indian rupees. Now that has increased to somewhere around 200 to 250 billion. When the government pays out that cash to the construction companies for the project execution, that is when the cash starts circulating and has an impact on the overall cost of capital in the economy. So I think those mechanisms will have to come into play. I don't really have a crystal ball.
All right. I also want to just ask you one final question because, what's happened over the weekend is fascinating. Over the weekend on Friday, we journalists were thinking, oh, my God, what's going to happen in Iran next? And then the SCOTUS verdict came. So all our plans went to miss. So that's kind of gone in the shadows. But how do you see investors, foreign investors, even Nifty, the domestic investors, assessing this weekend, given we've not even factored in what might happen with the US-Iran tensions?
Now, I'm actually a bit surprised by the resilience of oil prices, or in other words, maybe resilience is the wrong word that I'm using here. If this had happened, let's say 5 years ago, the United States talking about a military invasion of Iran, for lack of a better word, and if the kind of tensions in the Middle East that we have seen of late, if they had continued, oil prices would have been at 100, if not more. But actually, they have not really budged much. They have been in the range of about 60 to 70. Okay, Brent is now up to 70 to 71. But, I think the oil market is actually looking through this. They want to believe, or possibly the market believes, that this would ultimately be sorted out. And over the long term, the trend of hydrocarbon fuel gradually being phased out, that trend is possibly being accorded to much larger weight in the oil market mechanism than the short-term geopolitical, turmoil. It is a surprise to me, no doubt. I would have expected oil prices to be much higher. It is, in a sense, it's a good outcome for large importers like India.
Okay, I guess that's a net positive. That was Manishi Ray Chaudhary from Emma Capital Partners joining us on this incredibly important day right after the SCOTUS verdict. Thanks so much, Manishi. Much appreciated. All right. Remember, in India's financial capital, we are not just watching what the stocks are doing, we're also watching what the pollution is doing. And Mumbai was engulfed by toxic haze on Sunday, raising concerns over worsening air pollution in the city, which is, well, a coastal city. Air quality readings were recorded in the unhealthy category, according to monitoring agencies, prompting residents to warn of growing health risks, particularly for children and the elders. Locals say pollution levels are beginning to mirror conditions seen in other major Indian cities with fears of rising respiratory problems. Remember, there are those in Mumbai who say that basically the whole city is under reconstruction as it tries to, be developed. And Indian markets will be just joining the trading day. We will look at some movers in Mumbai and track reaction to the tariff news flow after a very short break. We're back in 2. We got 1 minute for the market to open. Welcome back. Indian markets have come online and the Nifty 50 is doing what was predicted, that it's up 0.3%, nearly 0.4% to 25,667. It's been a volatile time for Nifty 50 over the last couple of days. We're also watching the rupee. We've been hearing reports of intervention from the Indian Central Bank when the rupee had hit about 90.98, had also crossed 91 at one point, or weakening against the US dollar. At this point in time, it's staying steady, 90.74. We're looking at a couple of Indian IT stocks reacting to the news coming out of the US, the tariff news. Take a look. At this point in time, it's a bit up and down. Wipro is up 0.8%. Infosys is down. HCL Tech 0.2% up. Particularly Tech Mahindra is up nearly 0.8%, but Mindtree down about 0.5%. Now, these firms have a high exposure to the US, and AI disruption worries have kept these stocks on the edge lately. We're also watching some of the seafood exporters because, well, again, they are impacted by anything that happens in the US. They're up, as expected. Coastal up 2.89%, Apex up about 2.83%, and Avanti is up about, well, 0.5%. Textile firms been in focus for quite some time, particularly those exposed to the US. Pearl Global, one of the biggest in India, up about 3.5%. Wellspun Living up about 3.33% after having a couple of very, very bad months and uncertain months. Indocount up about 2%. Gokuldas 2% also. Shares of IDFC First Bank slumping in trade today. Was as expected? Well, perhaps this after the private lender reported fraudulent activities of about $65 million. The stock is down 10%. The fraud involves accounts of local government entities. The amount is roughly 0.9% of the bank's net worth. We're also watching what's happening with Taiwan's Honhai Tech Group and India's HCL because they've broken ground on a $435 million semiconductor facility in the northern state of Uttar Pradesh, India's largest. This is a big development because there's a lot of push for investments in this big state, which is very important in the electoral politics. The joint venture, India Chip Private Limited, will operate as an OSAT, or outsourced semiconductor assembly and test plant with capacity of 20 20,000 wafers a month, including 36 million display driver chips. The plant cleared under the India Semiconductor Mission, which has now gone on from 1.0 to 2.0, is expected to begin commercial production in 2027. India currently has no operational chip fabrication facility, making this a very key milestone in its electronics manufacturing ambitions. And Indian Prime Minister Narendra Modi laid the foundation stone for the HCL Foxconn plant. And here's what he had to say about India's semiconductor mission.
India may have begun its journey in the semiconductor sector a little late, but today we are moving ahead at a very fast pace. Under India's semiconductor mission, approval has so far been granted to 10 semiconductor fabrication and packaging projects. Out of these, 4 units are set to begin production very soon.
And Prime Minister Modi did also meet with top tech executives and AI startups on the sidelines of the India AI Summit. Organizers say the event secured over 200 billion in investment deals for AI infrastructure in the country, as predicted by the IT Minister Ashwini Vaishnaw. Now, Infosys' CEO Salil Parekh, he sat down with the CNBC's very own Arjun Kharpal on Friday out there at the summit and addressed India's AI push, saying adoption there is, quote, massive. Take a listen.
AI will become central to us in India, where Infosys, for example, will build out AI services where we help, as we do today on digital and cloud. We will help on AI with all of our large clients. And there the focus, we launched a few days ago, sharing a view on what are the 6 big areas where AI can work with large companies. For example, on AI engineering, which is building agents, or on data, which is making large company data ready for AI, or on legacy modernization, taking old technology and making it more relevant for today. So in that sort of a light, we've described 6 areas, and we've shown through some external estimates, it has a very large opportunity, over $300 billion. So huge progress. So the first part, really helping everyone in the country. The second part, helping everyone in the world and creating more and more employment here.
So it's more very much about the implementation, the adoption of the technology, rather than, I know there's been a big focus on things like the infrastructure layer, the frontier models, and this kind of thing, which of course we know places like the US, companies are very dominant in. Here in India, it's about the application.
So there are companies that are making models. So first, you may have seen the government have announced something on the chip layer as well. It's not something which Infosys works on, but it's already in play. Other companies are doing that. Then there's a focus on the infra layer, which is the data center layer. And again, a few companies have already announced investments. And from what I hear, the government policies are fully supportive of that. And then there's the foundation models. In the foundation models, Infosys has built what we call a small language model. A small language model being things where our clients can work on the technology, but with their own limited data set, not the open data set. And so that will work, and we will build that. I know there are other companies who are building it within the country. And then the part we talked about a little bit more was the applications. Where will we deploy all that, which is where our focus will be.
And in the enterprise space here in India, how is adoption looking right now? There's been a lot of commentary around businesses wanting to adopt AI, but perhaps facing difficulties in going from proof of concept through to at scale implementation of this. What's the appetite here, and realistically, what's happening on the ground?
So there are two elements to it. First, for clients of Infosys, the adoption is massive already. A lot of our clients are outside India. Within India, the adoption is picking up steam. What I understand, for example, we don't do a lot of our work in India. We do most of our work with clients outside India. But what we see is large companies in India already using it for everything from analysis of credit, pricing, supply chain, HR, marketing. So different places. And my sense is it's beyond like the proof of concept. Equally with our clients globally, We showcased about 12 examples when we showcased the 6 big areas, and we showed how each of our clients are using it in those 12 at real scale, not just for proof of concept. So we had examples on video where clients talked about it, and then we showcased in our labs what the actual work is.
All right, before we close up today, let's take a look at how U.S. futures are shaping up. Well, quite volatile, isn't it? They're looking down right now, implied open down for almost all three. The S&P 500, 0.7%, Dow 0.6%, NASDAQ almost 1%. And remember, Wall Street is coming off a couple of, choppy trading sessions on Friday. Once you had this kind of verdict from the Supreme Court, the stocks initially actually rallied. Then there was a pullback, and then again, they once again rallied. But at this point in time, how things are shaping up is interesting. Dow Jones had, at that point in time, gone up by about 230 points, about 5.5% up. Then the S&P 500 had gained about 0.7%, and the NASDAQ had gains almost 9%. But remember, at this point, the futures have dropped about 300 points or 0.6%, and S&P 500 and NASDAQ 100 futures sliding both about 0.7 and 1% respectively. We're watching very closely how things shape up. Remember, we're also looking at a couple of other factors, including oil prices. But let's also give you a sense of the Treasury yields looking like this at this point in time. Well, there you go. The 10-year is at 4.0864%. That's the one we're going to be closely watching. Remember, once the market opens, there's going to be a lot to digest. There's been a lot of uncertainty. There's a lot of action that's happened in Asia. There have been a lot of comments that have come in from governments in Asia regarding everything that's happened with the Supreme Court verdict. EU not quite happy. India pulling back on its trade negotiations. How will all of this play out? That's the big question. We're going to be watching it very closely through the day. That's all the time we have today on Inside India.